Family business succession planning. Keep watching to learn ways to transfer your family business to the next generation. As a business owner, you're going to have to decide when will be the right time to step out of the family business and how you will do it. There are many estate planning tools you can use to transfer your business. Selecting the right one will depend on whether you plan to retire from the business or keep it until you pass on. Perhaps you have children or other family members who wish to continue the business after you pass on. Obviously, you'll want to transfer your business to your successors at full value. However, with potential income, gift, and estate taxes, it takes careful planning to prevent some or all of the business assets from being sold to pay them, perhaps leaving a little for your beneficiaries. Therefore, business succession planning must include ways not only to ensure the continuity of your business, but also to do so with the smallest possible tax consequences. Some of the more common strategies for minimizing taxes are explained briefly in the following section. Remember, none are without drawbacks. Consult with us to explore all strategies. There are many estate planning tools you can use to transfer your business. Selecting the right one will depend on whether you plan to retire from the business or keep it until you pass on. You may get some relief under the Internal Revenue Code. If you are prepared to begin transferring some of your business interests to your beneficiaries, a systematic gifting program can help accomplish this while minimizing federal gift and estate tax liability and state transfer tax liability, if applicable, that otherwise might be incurred. This is done by utilizing your ability to gift up to $16,000 in 2022, $15,000 in 2021 per year per recipient without incurring transfer tax. By transferring portions of your business in that manner, over time, you may manage to transfer a significant portion of your business free from transfer tax. Clearly, the disadvantage of relying solely on this method of transferring your business is the amount of time necessary to complete the transfer of your entire estate. In addition, Section 6166 of the Internal Revenue Code allows any federal gift and estate tax incurred because of the inclusion of closely held business in your estate to be deferred for 5 years with interest-only payment for the first 4 years, and then paid in annual installments over the period of up to 10 years. Installment payments include both principal and interest. This allows your beneficiaries more time to raise sufficient funds or obtain more favorable interest rates. The business must exceed 35% of your gross estate and must meet other requirements to qualify. Selling your business interest outright. When you sell your business interest to a family member or someone else, you receive cash or assets that you can convert to cash, which can be used to maintain your lifestyle to pay transfer taxes. You choose when to sell. Now at your retirement or as you pass on or any time in between, as long as the sale for all full fair market value of the business, it is not subject to transfer taxes. But if the sale occurs before you pass on, it may be subject to capital gains tax. Transferring your business interest with a buy-sell agreement. A buy-sell agreement is a legal contract that prearranges the sale of your business interest between you and a willing buyer. A buy-sell agreement lets you keep control of your interest until the occurrence of an event that the agreement specifies, such as your retirement or disability. Other events like divorce can also be included as a triggering event under a buy-sell agreement. When the triggering event occurs, the buyer is obligated to buy your interest from you or your estate at the future market value. The buyer can be a person, a group, such as a co-owner, or the business itself. Price and sale terms are prearranged, which eliminates the need for a fire sale if you become ill or when you pass on. Remember, you're bound under a buy-sell agreement. You can't sell or give your business to anyone except the buyer named in the agreement without the buyer's consent. This could restrict your ability to reduce the size of your estate through lifetime gifts of your business interest unless you carefully coordinate your estate planning goals with the terms of your buy-sell agreement. Grantor Retained Annuity Trust or Grantor Retained Unit Trust. A more sophisticated business succession tool is a Grantor Retained Annuity Trust called GRATs or a Grantor Retained Unit Trust, GRUT. GRAT and GRUT are irrevocable trusts to which you transfer appreciating assets while retaining an annuity or unit trust payment for a set period of time. In general, an annuity means you receive fixed periodic payments, while the unit trust means you receive payments of the fixed percentage of the trust assets, revalued annually. At the end of the annuity or unit trust payment period, the asset in the trust passed to the other trust beneficiaries, the remainder beneficiaries. The value of the retained annuity or unit trust interest is subtracted from the value of the property transferred to the trust, that is, share of the business. So, if you're beyond the specified payment period, the business may ultimately be transferred to the next generation at a reduced value for transfer tax purposes. To learn more about GRATs and GRUTs, we have another video that goes further into detail. The link is in the description. Private annuities. A private annuity is the sale of a property in exchange for promise to make payments to you for the rest of your life. Here, you transfer complete ownership of the business to family members or another party, the buyer. The buyer in turn makes a promise to make periodic payment to you for the rest of your life, a single life annuity, or for your life and the life of a second person, a joint and survivor annuity. A joint and survivor annuity provides payments until the last survivor passes on. That is, payments continue as long as either the husband or wife is still alive. Again, because a private annuity is a sale and not a gift, it allows you to remove assets from your estate without incurring transfer taxes. Until very recently, exchanging property for an unsecured private annuity allowed you to spread out any gains realized, deferring capital gains tax. However, proposed regulations have effectively eliminated this benefit for most exchanges. If you're considering a private annuity, be sure to have a conversation with us and we can guide you in the right direction. Self-canceling installment notes. A self-canceling installment note allows you to transfer the business to the buyer in exchange for a promissory note. The buyer must make a series of payments to you under that note. A provision in the note states that after you pass on, the remaining payments will be canceled. Self-canceling installment notes provide for a lifetime income stream and avoidance of transfer taxes similar to private annuities. Unlike private annuities, self-canceling installment notes give you a security interest in the transferred business. Family limited partnerships. A family limited partnership can also assist in transferring your business interests to family members. First, you establish a partnership with both general and limited partnership interest. Then, you transfer the business to the partnership. You retain the general partnership interest for yourself, allowing you to maintain control over the day-to-day operations of the business. Over time, you gift the limited partnership interest to family members. The value of the gifts may be eligible for valuation discounts as a minority interest and for lack of marketability. If so, you may successfully transfer much of your business to your heirs at a significant transfer tax savings. To make it easier, we do have some worksheets that will hopefully help you guide you on a succession planning, such as planning for succession of a business interest flowchart, business succession planning alternative, business succession comparison chart, and a table that overviews buy-sell agreement forms. The link to download our free worksheets is in the description.